Lucid Group Inc. is currently trading at $5.78 per share as of this moment on April 30, 2026, marking an intraday decline of 1.53% from its previous close. While the broader market might look at a $5 price tag and see a struggling penny stock, the reality under the surface is far more complex than a simple price chart suggests. Most investors expect a luxury electric vehicle maker to follow the standard path of scaling production and slowly narrowing losses, but Lucid is doing something completely different right now. They are pivotally shifting from being just a car manufacturer to becoming a foundational technology provider for the massive global ride-hailing industry. The general belief is that Lucid is stuck in a cash burn spiral that it can never escape, especially with the recent capital raises diluting existing shareholders. However, the deeper look reveals that this isn't just survival money, it is strategic positioning. While everyone was focused on the headline delivery numbers for the Lucid Air, the company was quietly securing a massive commitment from Uber to integrate at least 35,000 dedicated robotaxis into a global network. This creates a massive gap between the market's expectation of a failing luxury brand and the reality of a company that is essentially selling the brains and the efficiency of the EV world to the highest bidders. When you look at the recent trading sessions, the stock has been pinned near its 52-week low of $5.62, yet the institutional activity shows a strange resilience. While retail sentiment on some investing sites might be panicked, the large block trades suggest that some big players are viewing this as a long-term play on the intellectual property rather than just the physical assembly lines. Analyzing the recent daily swings, we see a stock that is incredibly sensitive to macroeconomic pressures and the specific narrative of dilution. Just last week, the stock took a massive 9% hit when details of a $1.05 billion capital raise became clear. Investors using a Fidelity mobile app or a Robinhood trading platform likely saw their alerts going off as the price breached key support levels. But here is the part the market is missing. The involvement of the Saudi Public Investment Fund through IR Third Investment Company provides a backstop that almost no other EV startup possesses. This institutional support is the bedrock of the current valuation. If you look at the trading volumes, they have been surging to nearly 400% above average during these sell-offs, which typically indicates a transfer of shares from weak hands to those with much deeper pockets. It is a classic battle of tension between the fear of immediate dilution and the expectation of long-term dominance in vehicle efficiency. If you are following the Nvidia stock or Apple stock movements, you know that the market rewards platforms, not just products. Lucid is trying to become that platform for the EV sector. Their recent Q1 revenue pre-announcement came in significantly lower than the $433 million consensus, landing somewhere between $280 million and $284 million. That is a massive miss by any standard, and explains why the stock is sitting where it is today. But the reality is that the transition to a new CEO, Silvio Napoli, and the focus on the upcoming Gravity SUV and a midsize platform are the actual drivers of future value. The market is currently pricing in the failure of the Air sedan, but it is not yet pricing in the potential of the midsize platform due in late 2026. This creates a massive disconnect. For those using interactive brokers or Schwab Intelligent Portfolios, the volatility in LCID is a case study in why sector momentum can be so unforgiving when a company is in a transition phase. Comment below how many shares of Lucid Group you currently hold, and whether you believe the Uber partnership is enough to save the company from further dilution. Your engagement helps us understand the pulse of the retail investor community. Taking a step back to understand the business model, Lucid Group Inc. operates as a technology and automotive company that designs, engineers, and builds luxury electric vehicles. Their core advantage has always been their proprietary powertrain technology, which allows for industry-leading range and efficiency. Unlike many competitors that buy off-the-shelf components, Lucid builds its motors, inverters, and battery packs in-house. This is why the Uber deal is so significant. Uber isn't just buying cars, they are buying into an architecture that can run longer and charge faster than almost anything else on the road. This technology was born from the company's roots in battery manufacturing for racing, and it remains their strongest mode. Past performance shows a company that can build an incredible product, but has struggled with the brutal reality of manufacturing logistics and high interest rates. The cash burn has been staggering, with operating losses often hitting $1 billion a quarter. This is the reality that often falls short of the high expectations set during their initial public offering. Recent earnings reactions have been predictably harsh because the company is still in the heavy spending phase. They are building out a massive manufacturing footprint in Saudi Arabia and expanding their Arizona factory to accommodate the Gravity SUV. Institutional activity has remained relatively stable at 91% ownership, which tells you that the smart money isn't running for the exits just yet. They are watching the same data you are on your Fidelity trading platform or interactive brokers account, but they are looking at a 3 to 5 year horizon.
The risk of further dilution is very real, but it is balanced by the potential for a take-private offer from the PIF, which is a constant rumor circulating in the individual brokerage community. The macroeconomic pressure of high interest rates has made self-investing in speculative EV stocks a high-risk endeavor, yet the sector momentum could shift the moment the Fed signals a definitive pivot. Looking at the future outlook, there are two distinct scenarios. In the first, the reality of a Gravity SUV launch exceeds expectations, providing a higher margin vehicle that stabilizes the balance sheet. In this scenario, the midsize platform serves as the ultimate catalyst for high-volume sales, moving Lucid from a niche luxury player to a true competitor for the mass market. The second scenario is the risk of continued soft demand for high-end EVs, forcing more capital raises and further diluting the stock price toward the low single digits. The Uber robotaxi ramp-up is the key proof point here. If those vehicles start hitting the road and performing as promised, the software-defined vehicle narrative will take over, and the stock could see a massive re-rating. For those seeking investment help or looking into online investment options, it is vital to remember that Lucid is currently a high-conviction play. It is not for the faint of heart or those who cannot tolerate 10% daily swings. Whether you are using SoFi Invest, Robinhood, or Fidelity, the key is to look past the intraday price of $5.78 and focus on the execution of the next 18 months. The transition from a luxury sedan maker to a global EV platform provider is the story here. The expectations are low, the skepticism is high, and the reality will be decided by Silvio Napoli's ability to trim the fat and deliver the gravity on time. In summary, Lucid Group Inc. is at a crossroads where the market's negative narrative has almost entirely obscured the company's technological value. We started with a live price of $5.78, reflecting a market that is tired of waiting for profitability. However, the contrast between the expectation of a slow death and the reality of a massive 35,000-unit Uber commitment suggests that the company is building a life raft of recurring revenue and fleet sales. The dilution is painful, the revenue miss was significant, and the path forward is narrow. But for those who believe in the efficiency of the powertrain and the backing of the PIF, the current price represents a moment of maximum pessimism. We have seen institutional holdings remain firm, and the strategic shift to a robotaxi focus could be the very thing that changes the game without needing the buzzwords to prove it. The authority of Lucid's engineering remains unquestioned. The only question left is the sustainability of its bank account. As we watch the intraday volume and wait for the next board meeting on May 6th, the tension between what the market fears and what the technology can do will continue to drive every tick of the LCID chart. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.